Yesterday we talked about the Mincor Wyloo battle. Mincor have released their statement today saying, accept the takeover offer from Wyloo. Lads, let's unpack it following on from yesterday. Predicted correctly by money of mine, I will say.
That's right, Matty. We did flag this one in yesterday's episode, and it is unsurprising given the guidance that was pulled by Mincor that the board would ultimately just recommend the takeover offer. I had a look at the target statement, and there was some pretty strong wording baked into that within the chairman's letter itself, and I'll take the time to sort of read a few quotes within there because I think it's quite telling of what's actually undergone here at the mine itself. So in the chairman's letter, it stated that while mining rates continue to improve, the nature of mining is such that there is a risk that mine production and the ramp up may take longer than planned. The production may be less than planned and or the cost may be higher than anticipated. Mincor does not own or control its own processing infrastructure, instead selling ore on a mine-to-gate basis to BHP under what is known as an ore tolling and concentrate purchase agreement. While adopting this approach has provided Mincor with a low-cost pathway to production, it means that the company must be able to comply with its customer's product specification. During the ramp-up period, Mincor has delivered and BHP has accepted off-speculation product. BHP recently advised that it is unable to amend this agreement specifications to guarantee the full acceptance of 100% of mined ore. This places Mincor's cash flow and its ability to repay debts as they fall due at risk, as they are dependent on its ability to sell all of its ore. So this is pretty strong wording, ultimately encouraging Mincor shareholders to accept it because the board see the risk that they won't get full payability in the future as a quite a high outcome. With the board supportive, from my perspective, there's a pretty limited interloper field, especially given the individual risk of this asset with the BHP arrangement. So I'd expect this to be a relatively quick process now, and hostile takeovers are extremely rare these days, especially ones that actually complete as fast as I expect this to. Wyloo's at 23% now, and with the board recommendation to accept, I expect that to climb pretty quickly.
So Trav, that payability you talk about, is that the uncertainty that the specification would remain in lines for the future sales to the BHP concentrator?
Absolutely. So, their initial product has been marked as off spec. BHP have accepted some off spec product already, but they're not guaranteeing that they'll do that in the future. So, there's pretty big risk on the payability front there that the product will continue to be off spec. We don't have full visibility on the likelihood that will be the case. The board might have closer proximity to that answer, but that would pave a pretty big part of the economics of the project going forward.
So, JD, did you see this when it was trading at $1.67 the other week? Could have you seen this as an outcome? Do you think many people would have predicted this would have been the best and final offer?
Yeah, I think there's just a bit of speculation in the market at the moment. We've seen that with Liontown as well, trading a good few cents above what the bid has come in at. It looks pretty unlikely, even though over 10 million shares have traded this morning above the bid price, that anybody else is going to come in now with what Travis said, Wyloo having 23% of the company and the company itself accepting the deal.